Have you ever wondered if you can qualify for a reverse mortgage? Maybe you've heard about them from a friend, family member, or seen advertisements for them online. For some people, reverse mortgages sound like an incredible financial tool. For others, they come with concerns and misconceptions. The truth is, a reverse mortgage is simply a financial tool. Like any product, it can be incredibly helpful when used properly or very harmful if used poorly. I'm Brian Hogben with Mission 35 Mortgages. In this video, we're going to cover reverse mortgages and who qualifies for one in Canada. We'll also talk about how they work, pros and cons, and real life scenarios. Before we get started, I want to mention one thing. Every reverse mortgage situation is different. The amount you may qualify for, the amount of equity you may be able to access, and whether a reverse mortgage is even the best tool for you. It depends entirely on your goals and your situation. So if at any point during this video you'd like some advice, please click the link below and one of our team members can give you a home equity strategy session. Before we talk about qualifications, let's talk about why reverse mortgages even exist. One of the biggest challenges facing Canadian retirees today is what I like to call house rich and cash poor. They spend 20, 30, even 40 years paying down their mortgage. And now their home may be worth $800,000, $1 million, even more. On paper, they're very wealthy, but they're living on CPP, old age security, another pension. And the reality is the cost of everything has increased. Groceries cost more, utilities cost more, property taxes cost more. Many retirees have significant wealth locked in their homes, but with very little access to that wealth without selling. That's where reverse mortgages enter the conversation. So the question is, who can even qualify? To qualify for a reverse mortgage in Canada, all homeowners on title must be at least 55 years of age or older. The property must also be your principal residence, meaning the home you live in for most of the year. Reverse mortgages are designed for homeowners, not investors or vacation properties. You'll also need to have sufficient equity in your home. The amount you can access depends on factors like your age, the location of the home, and how much equity you have. Generally speaking, the older that you are, the more equity you have available, the more money you'll be able to access. You'll also need to demonstrate that you have the ability to cover ongoing property expenses such as utilities, condo fees, property taxes, and maintenance wherever applicable. Now, here's something that surprises a lot of people. Many Canadians assume that they won't qualify because they're retired. Others assume that you need a large income, and many think you need perfect credit. In reality, reverse mortgages are actually much more flexible than other traditional mortgage products. Income from CPP, OAS, pensions, and other retirement sources can often be considered. And qualification is more focused on the home and the equity rather than general employment income. So how does a reverse mortgage actually work? A reverse mortgage allows you to borrow against a portion of the value of the property without selling your home. Unlike a traditional mortgage, there are no required monthly mortgage payments. The loan is typically repaid when the home is sold or when the last remaining homeowner permanently leaves the property. The interest is added to the balance over time. This is why reverse mortgages can be powerful tools, but also require proper planning. Why should someone use a reverse mortgage? I'd like to share some examples with you that we've seen. The first one is a single guy, 65 years old, who lived in a condo all by himself, and the value of it was $450,000. He had no mortgage on the condo. However, he was on a fixed income of Canada Pension Plan and Old Age Security, and unfortunately, he had racked up over $90,000 in debt. In addition to that, he stopped paying his condo fees because the condo fees kept going higher and he was in jeopardy of losing the condo. He was a little bit embarrassed to actually talk to somebody, and when he did, he talked to his local credit union. The credit union actually referred them to us. We were able to get him to be able to keep his condo, stay there, and give him a little bit of extra cash to help bridge the gap. He wasn't ready to sell. He still loved his community and he wanted to stay there for at least another 3 to 5 years. On his $450,000 condo, we gave him a reverse mortgage for $197,000. That was enough to pay out all of his unsecured debts, bring all of his condo fees up to date, and give him enough of a surplus to be able to enjoy his lifestyle. This allowed him to live stress-free where he wanted to live for at least another 3 to 5 years before he decided to fully move and downsize. And that's really the secret to reverse mortgages, is that so many people have paid off their house. They did everything that they were told to financially, which was pay down your mortgage to zero. But now You have all this money sitting there that you can't access. The reverse mortgage helps you bridge the gap. I helped with another couple that wanted to help out their son. They had a beautiful home that was worth over $1 million in Burlington, Ontario. They had a small mortgage on the property of about $370,000. Their son got a new job and was looking to relocate into the United States, and he needed a down payment or a purchase of property. They were in their 70s, and again, fixed income on their pensions with CPP, OAS, and a retired work pension. However, they didn't make enough money to qualify for a bigger mortgage at a typical bank. We were able to increase their mortgage by another $200,000 so they could give it to their son so he could move and purchase his house in the States and start his new career. They still had significant equity left in the property, which they didn't have to touch. And they still loved their neighbors in their community and they didn't want to move. Their monthly expenses did not change at all. I know a lot of people think that they want to hand down their home to the next generation, but in this case, he was moving to the United States, so he had no interest in the family home. So the gift of equity when he needed it was much more powerful than giving the home later when he wouldn't even be in the country. And the last group of people we see a lot of is the downsizers. I had a recent couple that was in their mid-70s. They had a beautiful home worth $1.5 million. They had purchased it over 15 years ago and were very diligent in paying it down to zero. They were very nervous about moving because they had so many collectibles and they weren't sure where they were going to find a place that they absolutely fell in love with again. They had very particular requirements. They were looking for a townhouse about half the price, $800,000, but they did not want to sell until they found the place they wanted for sure. So in order to solve the solution, we took out a reverse mortgage on their home, which was enough money to purchase in cash the new property that they were going to downsize to. This allowed them to move in stress-free. They could take everything from the garage, get rid of what they needed to, and put the remaining things in the smaller garage. This was a big thing for the husband. The biggest concern for a lot of people who get reverse mortgages and are downsizing is not what they're going to sell for, but it's to make sure they move into the place they want to move to. Getting a reverse mortgage to secure the property you want is a great way to reduce that stress. Those are some scenarios that worked out very, very well, but there are instances where a reverse mortgage is not for you. So when should you be careful? Just because you qualify doesn't mean it's the right scenario for you. Imagine someone takes out a large reverse mortgage at 58 years old. They use the money primarily for discretionary spending, vehicles, vacations. These are lifestyle expenses. Fast forward 20 years, healthcare costs arise. Additional care is needed. The loan balance has grown substantially over time. Now they wish they had preserved more equity. This is one of the biggest mistakes I see. A reverse mortgage should be part of a retirement strategy, not simply a source of spending money. The best use cases are usually tied to improving quality of life, maintaining independence, reducing financial stress, or helping achieve a specific retirement goal. Let's bust some common myths. Myth number 1, the bank owns your home. False. You remain the owner of your home. Myth number 2, you get forced out of your home. False. Generally speaking, as long as you maintain the ongoing payments and maintenance for your home and all the other loan guidelines, you will not be kicked out of your home. Myth number 3, my children won't inherit anything. Also false. Any remaining equity after you pass away and the house is sold will go to your estate. The real question becomes, would you rather preserve every dollar of equity today or use some of that equity to give yourself a better retirement experience today? That's a personal decision every family needs to discuss. Is a reverse mortgage right for you? And that is really the most important part of the conversation. The question isn't whether you qualify. The question isn't whether the reverse mortgage is the best solution. There may be situations where downsizing makes sense. There may be situations where refinancing makes sense. There may be situations where a line of credit works better. And there may be situations where a reverse mortgage is exactly right for you. That's why strategy matters. What should I do next? If you've watched this far, you're probably asking yourself one of 3 questions. 1, do I qualify? 2, how much equity can I access? Or 3, is a reverse mortgage even right for me? Those are exactly the questions we help homeowners answer every day. That's why we offer a complimentary home equity strategy session. We'll walk you through whether you qualify, how much equity is available, the costs involved, alternative options available, and whether a reverse mortgage fits your retirement goals. Our goal isn't to sell you a reverse mortgage. It's to help you make the most informed decision possible. If you're over 55 and own a home, click the link below and book your complimentary home equity strategy session. We'll answer your questions, walk through the numbers, and make sure you understand all the solutions available to you. I'm Brian Hogben with Mission 35 Mortgages. If you found this video helpful, please like and subscribe, hit the bell, and you'll be able to see more videos on retirement planning, financial security, and how we help you build wealth with real estate. Thanks for watching, and we'll see you in the next video.